I will be taking my animals to market next week. Over these next 7 days, I will take all of my animals in for their booster or for their first round of vaccines. I took a hard look at the calves this morning, and they're all looking good. They've put on the 50 pounds. They've all put on at least 50 pounds since they first got here. A lot of them probably actually put on about 100. They're fattening up real good. They all look like they're doing okay. So I'm gonna get them all vaccinated. I'm gonna get the bigger ones all of their boosters, and then I'm gonna take these animals to the sale, and I will liquidate. And the big idea right now is for every 2 that I sell, I'll buy 3, okay? And then I'll hold on to the rest of the money, and I'll hold on to the rest of the money as insurance money. And depending on, but none of this stuff is set in stone. This is the direction that I'm going, and I'm taking a look at what I got going on, and this is what I reasonably anticipate will happen, okay? And so, depending on how much space I have in the preconditioning facility and et cetera, but I reasonably believe that I will be selling 2 and buying 3, okay? So I'll sell 4, I'll buy 6, and I'll come home with about $2,500 as well. And then maybe a week after that, I'll sell another 4, or maybe even 2 or 3 days after that, I'll go to a different sale barn and I'll sell another 4, and then I'll buy another 6. And then it's like over the week, I would have bought whatever. I would have sold 8 and bought 12. And I'm gonna have to see what's going on at the preconditioning facility. How much space do I have, and et cetera, et cetera. Do I bring in any sick cattle on accident, right? Sometimes I accidentally bring in sick cattle, et cetera, et cetera. So the rain and if I accidentally bring in a sick animal, anytime that I have a sick animal, I always look after the animals first, okay? That's one of my big, just the way that I do things, is that if I ever have a sick animal, whenever I have a sick animal, I always take, that animal's well-being becomes my number 1 priority, okay? So I always look after the animal first. That's what I do, okay? And so, yeah, but that's what I got going on this week. I'll get all the animals vaccinated. A lot of the animals will be getting their booster. The other half of the animals will be, half of the animals will be getting their booster, and they'll be good to go, and the other half of the animals will be getting their first shot. And so they'll have a round of vaccines in them. They'll be good to go. And then I'll start liquidating and bringing in more calves. I will grow the business, and I will use the excess capital to ensure the growth of the business and buy whatever else it is that I need to buy. And the thing about insurance money is that after about 2 months, even after about a month, okay, after about a month, if I still have insurance money left over, I can just take that money and just buy more cattle with it, or do whatever it is that whatever it is that I'm looking to do with it. And right now, the capital, I'll be growing my business by about 12.5% on a monthly basis. I will be growing my business by 12.5%. I won't be using any debt, and I will be growing the equity of my herd, okay? And so I'll be growing the business about 12.5%. I'm not guaranteeing it, but I am insuring it, okay? I will insure it, and there is no guarantee, okay? I will be growing the size of my cattle herd by 12.5% a month, okay? Right now, and the big idea is to just put away enough equity so that I can take a loan against my cash flow early next year. Instead of taking loans against my cattle herd, I will take a loan against and early next year, I'll have so much equity put away that even if I don't take a loan against, I may I'll have to see, okay? I'll have to see, I'll just have so much equity put away. I'll just have such a large amount of money put away, even if I don't use loans. I mean, even if I don't use loans, I'm still growing my business by 12.5% a month. But, the thing is that I do use a little bit of debt, okay? I talk about the idea of debt, and that debt is never the answer, okay? If you're not going to make money to begin with, using debt is not going to help you, okay? I guarantee it. You don't want to be in a situation where you're leveraging yourself to the eyeballs, okay? It doesn't matter what it is. My whole thing about using debt is that you have to be very, very, very thoughtful. You have to be very, very, very you need to understand what you're doing when you're using debt, okay? You have to know what you're doing. When you have to at least have some kind of an idea. You need some kind of a good way to you don't just want to use debt, okay? I've talked about debt. Me, when I use debt, I use a very small amount. I use a very small amount, and the reason is because I have assets that I have money tied into that I don't want to liquidate. Okay, I have assets, I have the money already, but if I'm going to access the money, I need to liquidate the investment, and that's why would I do that if my assets are going to continue to appreciate, right? And my whole thing about utilizing debt is that it's very, very, you have to be very careful about it. Okay, I do use debt, but I do not use a lot. I use a very small amount. I mean, in all honesty, like, I talk about leveraging against 1/3 of my cash flow, but in reality, it's actually going to be less than 1/3, because my cash flow is always a lagging indicator for how much money I make. Because when I take a look at it, right, if I determine if I take a look at the money that's in my hand, whenever I take a look at the amount of money that is in my hand, that amount of money should be going upwards effectively all the time, right? That money should be going upwards all the time. If that money is going downwards, something is wrong. If that money is going downwards, there is a fail-safe, right? And that is the other 2/3 of my income. If I leverage against 1/3 of my earnings, that should be a lagging indicator, okay? The earnings should be going upwards, because I should have invested the capital in a way that would have made me some kind of a positive return. I should be increasing my income when I invest that money. Okay, when I invest money, I should be raising my income. The amount of money that I'm making should be going upwards. All right, if it's not going upwards, then something is wrong. I would stop leveraging, and I would use the other 2/3 of my income to make sure that I fix the problem, right? I figure out what's going on and I fix it, right? That's the fail-safe. And in terms of a fail-safe, yesterday I was, the whole thing about the broader asset market, right? This is something I discuss all the time. The broader asset market is counterbalanced by the bond market, right? And that's why it is such a good idea to invest into broader market assets. Broader market assets are effectively a way to just extremely diversify your investment with one investment. Okay, it's called extreme. It's like extreme diversification. But on the other hand, like, when you take a look at what I'm doing, right? This is something that I discuss. But even if you just bought the S&P 500 your entire life, you'd effectively be good to go. If anything ever happened to your investment portfolio somewhere along the way, like you legitimately lost 50% of your investment, your investment went down by 50%, you would have a fail-safe, right? You would have a fail-safe. Like, if you were investing into the S&P 500 and you were investing $2,000 a month, and the S&P 500 just did what it did for the last several decades, for the next several years. If you invested $2,000 a month, within about 7 years, your investment would be making you about $2,000 a month, okay? And then if you're still putting in your $2,000, you would actually be growing your investment portfolio by $4,000 a month, and that would also compound on itself as well, right? Invest your money first, and even and then you can use your money anyway, right? Like, if you invest $2,000 a month into the S&P 500 for the next 5-7 years, and your S&P 500 starts to make you $2,000 a month, and you've decided that you're going to go and buy yourself a whatever, right? And the whole thing about it is, I'm not suggesting that you go and take a loan against your assets. I'm not saying go and use your cash flow. Don't go and use your earnings to go and buy something ridiculous. Okay, you probably that's just from a broader idea. That's just a fundamental way. That's a fundamental way of going broke. Okay, of legitimately being poor for the rest of your life. If you spend more money than you make, if you spend more money than you make, you're going to be poor for the rest of your life. All right, there is no way that you can out earn that. If you spend more money than you make, there is no way that you can out earn that. Oh, well, I'll just make more money. That's complete BS. All right. Because what happens if you don't make more money? What happens if the economy turns around on you? What happens if there's a bear market, right? What happens if things just don't turn into a magical journey, right? I mean, you have no fail-safe. You've been spending more money than you make. What's your fail-safe? Bankruptcy? I mean, what's your fail-safe? You have nothing, right? You're swimming around butt naked, right? And the tide went out, and now here you are, right? And you don't want to be in a situation where you are just making fundamental problems, where you have fundamental issues, because like stuff like if you spend more money than you make, there is no way that you will out earn that. All right. Things don't go well forever. Okay. Things are not just, some magical journey. You need to have some kind of, things are not a thing. Life is not a magical adventure. Okay. Life is not a Disneyland journey. Okay. If you don't have some way to, if you don't have some kind of a fail-safe, I mean, you're effectively swimming around in the water butt naked. That's what you're doing. All right. And if the tide goes out, there you are, right? That's what's going to happen, because things do not go up and to the right forever, okay? And, and I've spoken about like my business, and just, when we take a look at it, okay, I do very well for myself. I actually made it, okay? This is not my opinion. I do very well for myself. My business is growing by 12.5% on a monthly basis. I'm not using any debt. I still have money left over, okay? I'll actually probably grow my business by more than 12.5%. I'm effectively just ensuring 12.5% growth, and I will be leveraging against my earnings, early next year, okay? And my whole thing about it is, when it comes down to it, it just is what it is. I actually made it, okay? I actually made it regardless of anything else. This is not my opinion. Nobody cares about an opinion. If you have a bunch of opinions and you have nothing to show for it, you're going to die poor. I guarantee it's a sign that you're an idiot. All right? It's not funny. It's not amusing. Like, you should not be in a situation where you're an idiot and you think it's amusing. It's not amusing. It's one of the worst things that could ever happen to you in your entire life. All right? You need to get it together. If you don't, you're going to die poor. And there is no benefit to being poor. All right? Being poor does not make you a better being poor does not make you a better person. Being poor does not make you it does not make you some kind of a saint. There's a very legitimate possibility that you're just poor because you're an idiot and you stopped trying a long time ago. Your life is a magical journey, and there you are, right? I was born with the answer, and et cetera, okay? Like, this stuff is not my opinion. Like, when I discuss it, I'm the one who made it, right? And it just is what it is. I mean, you don't like it, what are you gonna do about it, right? I mean, let's see it. I would hope that, my whole thing is, like, if you legitimately, I would hope that, that you, or, whatever, like, if you're legitimately, like, in a situation where you're watching me, because, and I've always said that the thing about hanging around, well-to-do people is that when you hang around well-to-do people, chances are it will rub off on you, right? It will become a part of your life. That's why it's so important to hang around well-to-do people, right? When I take a look at it, Warren Buffett is one of my favorite people to watch. Okay, hang around people that have something, and they're getting after it, and hang around people like that. They're getting after it. They they got a good head on their shoulders. They got some kind of a moral backbone. Okay, they're not just gonna bend to some horrible thing. Okay, they got some kind of a moral backbone. And et cetera, and they do well for themselves. They got something going on for them. Figure out what they're doing, right? Figure out what these people are doing. All right. And and hang around these people, and surround yourself, not hang around these people, surround yourself with these people, and it will probably rub off on your life. It probably will. If you hang around a bunch of idiots, you are going to become an idiot. There is nothing that you can do about it, okay? And effectively, almost everybody is an idiot. All right, almost everybody is an idiot. And this is not amusing. I'm not saying this because it's fun. I'm not getting a kick out of it. I don't think it's funny. Almost everybody is an idiot. All right, and this is something that you'll see. When's the last time that you met somebody and you just thought, wow, this person is a saint? When's the last time you met somebody and you were like, wow, this is the next Jesus Christ? Wow, this is a saint. When's the last time that's happened? Right? Almost everybody is just a massive pile of problems. All right, and you should work on doing better. And the whole thing about doing stuff like this is that, like, when you take a look at what I'm doing, right, and I discuss this in terms of a broader idea, business as a global competition for dollars. If you put me on a field anywhere, it doesn't matter where you put me, I would effectively just rip everybody apart. It just is what it is. I'm not doing it because I'm a malicious person. I'm not doing it because, you know, what do you want me to do about it? Do you want me to stop working? Do you want me to stop putting in effort? I mean, what do you want me to do about it? I effectively out-earned like every individual earner in the entire economy. Everybody on the entire planet by myself. In terms of individual earners, I'm not talking about like corporation earnings, okay? I'm not talking about like Apple. I'm not talking about like, you know, some massive corporation. I'm talking about just me by myself in a backyard. You know, in terms of it as an individual, I managed to do effectively better than every individual on the entire planet. And I managed to do it starting myself a cattle business. It just is what it is. Like, you know, right now I probably it's somewhere around $37,500 a month. It probably is. And here in about 5, 6, 7 months, it's gonna be about 80,000, and you know, and I'll probably just keep going upwards. I probably will. If I ever enter a situation where I think like things are getting out of hand, and et cetera, then I'll stop investing. Okay, and I'll just say that this is what I believe is happening. But right now, I do very well for myself. All right, and you should hang around successful, well-to-do people, because stuff like this it's not some, you know, stuff like this, right? And the whole thing about stuff like this is like, this is legitimately, it's going to take such a long time. Like, if you're legitimately looking to do something, like, or even if you're looking to do, because here's the thing, like, if you start investing into the S&P 500, it's very straightforward, and your investment has already been, you know, you already have a fail-safe in place. Your investment already has a fail-safe. If you invest in the S&P 500 and that is all you do, it's very straightforward. You can, you know, when I discuss something like the S&P 500, a broad market ETF, you know, investing into the broader asset market, et cetera, you already have a fail-safe, and it is the bond market. But, you know, stuff like this, you know, if you go out and you look to run cattle, there is no fail-safe. You are your own fail-safe, and if you mess up, you're not gonna make it. All right, you know, you could legitimately, you know, and I talked about this, like, when you think about running a business, because when you have a farm, right, the big idea of a farm is that you effectively are going to have to start your own business, is what you're going to have to do if you want to run a farm. If you're looking to run a farm, you are running your own business. But when you invest into the S&P 500, you are investing into the S&P 500. You are not having to, you know, run your own business. And the big thing about running your own business is that if you, the owner of the business, is going to have the biggest impact on what happens to that business. And if you mess up, you could legitimately end up in a situation where you make nothing your entire life. You could work 100 hours a week and you could still make nothing. All right, but if you invest into the S&P 500, you already have a fail-safe. If you legitimately want to become a farmer, like, when you take a look at what I'm doing, you need to realize that something like this is closer to a 0% success rate than 0.00001%. You're more likely to end up with nothing than anything like this. And if you still think that you have what it takes to go and do it, you know, just understand that I give you the best information that I can. I show you how I do it, because why not? You know, a lot of this stuff, if you don't go out and, you know, it's like, if you don't spend, you know, if you're very fast and you're very committed to the idea, if you are very fast and you are very committed to the idea, like you're above level intelligence and you are very committed, you may be able to get to the 10% mark in 3 years. Okay, like, if you live where you work and you work on it every single day for the next 3 years of your life, you live where you work, all right, you work where you live, and you work on it for the next 3 years of your life. Even if you're average IQ, you should be able to make it to the 10% mark in about 3 years. All right, but a lot of people aren't going to make it to the 10% mark their entire life. Think about the 10% mark in terms of a monetary value. Think about 10% as $75,000 a year. All right, think about 10% as $75,000. If you make it to $75,000 a year, then you are now doing 10%. All right, it's simple as that. Okay, but when you invest into the S&P 500, you already have a fail-safe. You have a fail-safe that is designed into the investment, and that is the bond market. All right, you have the bond market. You already have a fail-safe. If you go into something like this, you are on your own. You are completely on your own. You're gonna have to grow your own grass. You're gonna have to run your own business, and you're gonna have to run your own cattle. And if you don't do very well, then there is no fail-safe. All right, you make nothing. You could end up in a situation where you work 100 hours and you make nothing. All right, when you take a look at something like what I'm doing, you have to understand that the success rate is closer to 0% than it is 0.00001%. Very close to 0%. I don't know anybody else that's doing anything like this other than me. Not a single person. If you put me on a field with anybody on the entire planet, and it just, if it just is what it is. If you put me on a field with anybody on the entire planet and just said, it just is what it is, let's see who can do it, I would effectively just rip everybody apart. And I wouldn't do it because I'm some horrible person. I mean, my whole thing is what do you want me to do about it? Do you want me to stop working? What do you want me to do about it? Is that going to benefit anybody? If I stopped working, is that going to help anybody? Right? And my whole thing, okay, so with debt, I am going to use some debt. I do use some debt. You don't want to be in a situation where you are using debt thinking that it's going to make your life better. That's where you don't want to be, okay? When it comes to debt, money does not do anything. And throwing more money at something is not going to help you. All right, if you're not going to make money to begin with, why would you throw money at it? All right, if you're, because you could end up in a situation where I call legitimately poor, right? This is the thing that you're looking to avoid. And this is the one thing that, in terms of you legitimately, this is the big problem is being legitimately poor, having nothing forever. That's the big problem. All right, you don't want to put yourself in a situation where you are effectively going to end up with nothing forever. All right, and you can actually, you don't even have to leverage yourself to the eyeballs to end up with nothing forever. If you lose a couple $1,000s or what, it's not that big of a deal. If you lose half of your income, that's a big problem. If you put yourself in so much debt that you would have to, work for 7 years and not, and use 100% of your money to pay off your debt, that is a major problem. When I use debt, I am leveraging against 1/3 of my earnings. And in all honesty, it's probably closer to 20%. Because it's a lagging indicator. I'm actually making more money as time progresses. And my whole thing is when I invest, if I don't get a positive return, then I stop investing and I figure out what the heck is going on. And when I invest money, when I take debt, I purchase equitable assets at their appraisal value. All right, so I buy something valuable. I buy something that is as valuable as the debt. And I do that so I can grow the value of the investment. All right. And if I ever end up in a situation where I have my income going downwards, if I invest money and my income does not go upwards, that is a major problem. Something has gone horribly wrong. Why is that happening? I need to figure it out, okay? And remember, when you invest into the S&P 500, there is already a fail-safe inherently designed into the broader market ETFs. If you buy into an ETF that effectively buys into the broader equity market, if you buy into the market via a broad ETF market or via a broad ETF, broader market ETF investment, your investment inherently has a fail-safe, and it is the bond market. If you legitimately, like, if half of your investment, if your investment goes to 50% and you are invested in the S&P 500 and you've been investing into the S&P 500 for the last 10 years of your life, interest rates are going to be borderline. Interest rates may even go negative if the S&P 500 drops by 50%. They may not go negative, but they'll go very low, like 1%. All right? Interest rates will collapse if the S&P 500 tanks 50%. All right? So there is a fail-safe inherently designed into the investment if you invest into a broad market ETF. If you do something like this, just understand that it's not even cattle. And this is why I, talked about the idea of individual businesses and why it, but the whole thing about individual businesses, extreme diversification and not diversifying at all. Like me, I effectively make all of my money running beef cattle. I don't make any money on YouTube. I don't make hardly any money doing anything else other than straight beef cattle. Beef cattle is where I make 99.99999% of my money. Beef cattle is where I make my money. I legitimately make money running beef cattle, and when it comes down to it, I do so well at it, I effectively out-earn the entire planet. All right, effectively every individual earner on the entire planet, I managed to do better than effectively everybody. Not everybody combined, but if you, if you put me on a field with any person on the entire planet, it could be anywhere, and just said it is what it is, let's see who's got it, let's see who can do it, and and it was just, everyone was going to start a cattle business, I would effectively, I would be, near the very top of legitimately doing well. Like performers, I would be at the very top. I may even be at the very top. All right, right now I probably do make somewhere around $450,000 a year. Here in about I would reasonably anticipate that over the next 14 months, I end up netting myself about $1 million, which will be about $70,000 a month on the average. All right, and if you know somebody else who makes $450,000 a year take home pay, if you know somebody else that makes $1 million, if you know somebody else that makes $70,000 a month take home pay, then then see what they're up to. All right, go and subscribe to their channel and see how they do it. All right, see what they're up to. All right, if you find somebody who and you're like, well, this person has some kind of a moral backbone. I mean, they're not like selling drugs, they're not doing something illegal, right? I mean, they're doing some kind of a legitimate business, and they got some kind of a moral backbone, then subscribe to them too. Okay, Warren Buffett is a very good in terms of discussing the idea of investments. Warren Buffett is really good at it. Okay, and nobody's a saint. Okay, I'm not a saint, you're not a saint. All right, Warren Buffett is not a saint, nobody's a saint. Okay, but you don't want to be in a situation where you think that you have to be a horrible person to make money. That's not true. Okay, it's not true. You can have poor people that are horrible people. You can have rich people that are horrible people. You can have poor people, whatever, right? I mean, it's all just people. Okay, and surround yourself with well-to-do people. Stuff like this, it's legitimately so difficult, and it just is. I mean, unless you're like some 200 IQ, and everything that I'm saying just gets absorbed into you and you understand it just right out the gate. Even me, it took me almost 16 years to make it. It took me almost 16 years, and I split my chops open. I split my chops open to make it. All right, I legitimately split my chops wide open to make it. And a lot of people not even going to get to the 10% mark. Opinions don't matter. Okay, opinions don't matter. If you have a bunch of opinions and you have nothing to show for it, first of all, you're an idiot. And chances are you're not going to get to the 10% mark if you live to be 5,000. It's already too late. It's already too late. You're not going to make it. I would be willing to bet. And if you made it, I would be very happy for you, and I would shake your hand. There is no reason why you can't do 10%. All right, there is no reason why you cannot do 10% if you're average IQ. And that other field that I sprayed the herbicide on, I sprayed, I sprayed the crap out of that field, and I will be spraying it again. I will spray the legitimate crap out of that field, and the herbicide is working. It's definitely working. Everything is starting to die off. Everything is starting to die. Not everything, but all the brush and all the weeds are starting to die. I can actually tell that the weeds are dying. I can actually tell that the brush is dying. And here in the spring, I will spray it again. I'll probably spray it with 2,4-D and some more remedy, and then I'll call it a day. You know, I sprayed the crap out of that field, and I'll spray the crap out of it again one more time, and the herbicide is definitely working. I can tell.